All right, everyone. Here we are with ticker symbol SPX, the S&P 500 index, and here we are with stock market crash. Is it coming? All right. So for all my first-time viewers and investors, welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative, and I hope to share new information with you guys that you haven't heard of, or you may have overlooked, or you've heard about it but you just didn't know too much about it, and then now you're actually being enlightened. And I hope to inform you guys with something new or something worthwhile. And if you guys feel inclined or encouraged to subscribe, don't forget to click on the subscribe button, but also click on the bell so that you don't miss a single video that I post. To all my subscribers, I want to say thank you. Thank you for your support and recognition to my efforts. Let's jump into this chart. So the first thing is very bullish run. I mean, these are notes from the previous videos and certain directions that I had stated and moments where it leveled off. And I was talking about how the Federal Reserve, when it fell, they pumped it and it rose, and then the momentum here and the points of leveling off, and then where it was going to end up, and so forth. And then the last time I did a video about this, I stated how there was momentum built there in that pump and so forth. So one of the last pumps before this fall was September 1st, and I want to point out September 1st because September 1st was one of the last days that this pump actually had an effect in a positive manner with the market. And I'm going to explain why it wasn't a big deal the last time it did it. And I don't know if it was because the pump didn't turn out to do what it was supposed to do, or it did do what it was supposed to do. Because as I always said, the pump isn't supposed to just make stocks rise up. If anything, it's supposed to stop the fall from being much harder. So the 31st was here. September 1st started here, and it started to rise. It rose all the way up to here, and it built catalysts, right? And it started at this point of 3,500, and it ended up at this point of about 3,530, or like 27 to 30. And then it built momentum to continue to bring the anticipation of the bulls to continue to have a run in that upward direction, to the point that it reached a peak, right, of 3,587, almost 3,600. And that's the highest we've seen the S&P 500. And from that moment forward, this has been a downward direction. And to show the proof that on the first was one of the pumps, clearly right here, 9/1/2020, and they did it in the morning. And then the next one was on the 8th. And the reason why I want to speak about the 8th and why either it did do what it was supposed to do, or these pumps are going to start to get weak and not make a big difference. We're going to see once they announce the next ones, and if they're actually even going to continue. But here we see on the 4th, there was catalyst, anticipation, excitement, and quickly on the 8th, instead of building momentum to continue and break through the 50-day moving average and go in this direction, right? It went the opposite direction. It went down here. And it went in this direction. This is what the pump ideally would have done. If the anticipation was here, it would bring the stocks up in this direction. Obviously, the index, Fortune 500, collectively the 500 stocks, but I like to just look at it based off the index because it gives you an overall idea of all the stocks and the whole entire market involved in this index. And also a lot of these stocks, they rise with it, and the ones that are receiving it. But back to the point, that anticipation was being built, and then quickly it dipped. Now you could see there was a slight recovery here in the middle of the day, and then towards the end of the day it just dipped again, and then on the 9th is where this recovery happened. And between the 2 days, it basically slightly leveled off. You could see that, there was a little bit of a higher point here, and it kind of missed it. It leveled off. But then again, here we are in this direction. Even though this is actually kind of moving upwards again and this momentum's being built, that's phenomenal. But this momentum needs to bring this up in this direction. If it doesn't do that, then this is going to continue to hang out and do this movement. And yeah, you started at this point. Yeah, it kind of hit a peak, and then your next peak is lower, your next peak is lower, and then your next peak is lower, and you'll be down here. Theoretically speaking, based off of what the chart is showing us. And for the first time out of all the scheduled pumps, this pump is the one that did the least. It just rose it up from basically 33.40 to 33.76, and that was more of like a level off, and quickly dipped back down to newer lows of 33.30. And yes, on the 9th there was a great catalyst, and that's phenomenal. Crossed the 50-day moving average, went up almost a total amount of 100 points or $100, whichever you want to refer to it as, and then quickly fell again. And here we're seeing the momentum. Now, the 8th was the last one scheduled for this term. We don't know the next pump date until the 14th. So we haven't had a pump since the 8th, and this whole week is uncertainty all the way until Monday, the 14th. Now, a lot of people are feeling like the Fed is going to continue to pump, that these days aren't days of uncertainty, but I would still call them days of uncertainty because you can clearly see it in the market. I mean, it recovered on the 9th, and that's great, and then quickly after it dipped and it leveled off, and it's at a lower point than even how it started on the 8th, right? So, I mean, it's pretty close, and it touched newer lows of 33.10. It's pretty close to the recent lows of the 8th towards the end of the day, and then it hit newer lows. And there was a slight recovery ending the day, reaching highs of 33.52, but broke and leveled off at 33.40. A 50-day moving average is 33.71. So for this to get back into bullish territory, they got some work to do. They got to break through it and continue the momentum. Now, I call it days of uncertainty because we don't know. They can change the next scheduled release. That could be called that, and they could be saying and calling it that, and all of a sudden, that next scheduled release, they say, well, the pumps ended right here. We're not gonna do pumps for now or for the next month, or we're done with the repo market. And that will definitely affect everything and flip it around. Now, if let's say, okay, they say, yeah, we are going to have the next scheduled dates, and the next scheduled date starts on the 15th, or they say, oh, we're not doing all the rest of next week, we're going to start next week after that, between the 21st and the 25th, one of those days, that's another 5 days of no pump, which we will continue to see some type of catalyst forming like this in that direction, continuing to fall and kind of hang out and hit newer lows. Now, if they do state that there's going to be a pump next week and it is in the same week instead of waiting till the next week, well, that will create anticipation. And the biggest question is seeing what happens Monday. Does Monday bring this up and level it off? Because if it does bring this up and level it off, or at least get closer to the 50-day moving average, or breaks through it, also, whichever of the two, if it kind of misses it by a little bit or it levels off right with it or slightly above it, the pump the next day should actually bring this up in this direction. So that is what the pump does. It's there to recover the losses that have happened or stabilize it like it clearly did here on the 8th. But this was one of the weakest times that I've ever seen the pump stabilize. It did finally kind of stabilize at some point in the day, but that I've never seen it allow the pump to do that. Now, what I have seen pumps do, which is possible, is if they can, go ahead and consider that there will be a pump and they announce it clearly on the 14th, which is Monday. Obviously, Monday, this was kind of hang out, whatever it's going to do. and then the pump actually brings the whole entire index up, kind of trying to break even or level off, and their goal is to kind of get back to these highs and continue to pump until they break through it, because that's all these pumps have been doing. They level off the market and they recover it. They level it off and they recover it, and then do such things where it kind of bounces right back. But the most important thing is when a scheduled pump date starts, wherever it started, and ends up at a higher point. And I'm going to show you guys that as well, because that's something that I kind of do that to make it simpler terms and make you guys understand that once these pumps are announced, you can actually take advantage of them and go ahead and get in the market and ride the wave, because that's what these pumps are doing. I know that there's volatility, the stocks are going up and down, there's uncertainty, but something I've seen these pumps do, I mean, this is the first time I see the pump leave me with kind of uncertainty, so I'd pay very close attention to how it reacts this next week. But what these pumps have been doing is no matter the up and down, you start at one point and you end at another. So let's look at when this one started. So this started on August 18th and it ended on the 8th. Let's just go ahead and look at the peak close to the first, just so you can get an idea. And as an investor, if you saw it quickly falling from there, I would have made a decision myself. And I'm going to explain a little bit better what I'm trying to say here. So August 18th, I circled it. That's when I talked about it. At one point, I talked about how it rose and it went from 33.70 to 33.93. That's a 20-something point difference. And in stocks, that can be anywhere between, 20 cents to $2, depending on the specific stock. But the index went up 20 points. So here's the 18th. We started here at 33.70, and let's go all the way to the first. The first right here, even with the SPY or even the index itself. So like the first ended right here. And that is, let's see, the last one for the first was here. And that was on this point right here. Yeah, that's already the second. So it was on this point, 35.27. So if we go back down there, right? I'm going to draw a big circle around all this. You could see the exponential growth, and this went all the way to the 8th. So if you guys want me to show you guys the 8th, right, it leveled off here. So this is what I wanted to explain and make you guys understand. So this is the first time that I've seen that when the pump happens, it's ended up below where it started. But throughout the process of the pump, right, it went up in the upward direction. You started at this point, right, 33.70, and you ended up at this point, 35.40. And that right there tells you the power of this opportunity to start in at the low point at the beginning of the scheduled dates, which is August 18th, and it ended on the 8th. I know it ended on the 8th, but I'm using up to the first because those were the last couple of highest days. So let's say that you hold through the first, because you held through. You were trying to be bullish and you took the risk and you saw it continue to rise. And okay, it reached that on the second, it reached that on the third. If by any chance it started to slightly dip and you have your 50-day moving average on your chart and it broke through it, right, on the third at this point, hypothetically speaking, I would have gone out, me, as an investor, because I had an intention of starting here, but when you look at it, that's the lowest point, and this is the highest point, and it still rose up. You went from, obviously, 33.70 to 35.23. And in stock wise, depending whichever individual stock, that should be a significant difference as well. So that's something to pay close attention to too. For those of you that are watching this for the first time or have watched this and still not understanding completely, look at different ticker symbols involved in the S&P 500 and watch their behavior, and are they moving with the S&P 500 index? Are they doing the similar moves? On the day to the pump, are they rising a few cents? Are they rising $1? Did they start here on the 18th? Did they end up here on the 3rd? And so forth. So that's a strategy that I'm just sharing with you guys. I'm not here to tell you guys to buy. I'm not here to tell you guys to sell. I'm not here to tell you guys to hold. I'm just here to enlighten you guys and take advantage of this opportunity. Now, I do want to disclose, like I've been saying in this video, that this is the first time that I see a pump start, right? The start date, and end up below on the last day or slightly breaking even on where this all began back on the 18th, the scheduled pump dates, and ending on the 8th. This is the first time I've seen the pump be so weak and honestly not make a significant difference. The pumps aren't made for it to start here and go directly up here. They're not. The intention of it is to save it from falling lower. So the pump did do ideally what it's supposed to do, and it stopped it from just going straight down. But this was the weakest I've seen it react. And I'd pay very close attention to how Monday starts off, right? If we do get the scheduled date, right, that it says the next date is on the 14th, I will be posting a video on that. The next date is on the 14th, as I showed earlier in the video. And once that's released, if it's on the same week, I will be posting that video for you all so that you guys don't miss out on that information. But we won't know until the 14th. I believe they release it either towards the end of the day or after market hours. So as soon as I know that information, I'm going to share it. So for those of you that are first time coming across this video, or have been watching these videos but haven't subscribed, I do encourage you guys to subscribe. Don't forget to click on the bell so you can turn on your notifications, because I will be posting these videos weekly so that you don't miss the dates of the pump. And we're going to have to see how that plays out once they announce it. I'd pay very close attention to how this reacts Monday. And if Monday slightly dips and hypothetically speaking, Tuesday or Thursday or Wednesday that week is the pump, what it's going to do is Monday and whatever other days it might slightly fall, and the pump might level it off to kind of break even and end up back at 33.40. Now, if Monday starts to rise and then Tuesday rises and Wednesday's the pump might just use that momentum and continue to hit newer highs to reach back into bullish territory. So we're going to have to see which one of the two it plays out, because yeah, it could go in this direction, kind of level off, kind of do that on Tuesday, and then Wednesday hit these newer highs and end up at some point up here, right? And we ended up at 34.44 from these lows of 33.40, right? Or on the other hand, it can end up doing such thing where we could see it kind of hanging out, and it rises and it dips and it rises and it dips, and then all of a sudden on the date of the pump it rises again back into this position, and it kind of just levels off the stock, ending up back to where it was at, and then hopefully continuing to build momentum until the next pump, and then obviously rise the stocks back up into this bullish territory, and hopefully leveling off back to these highs and breaking through them. That's ideally the goal there at that point. But we're gonna have to see how it plays out. I really encourage you guys to take advantage of this information. Just be very diligent and do your own due diligence, do your own research. When it comes to individual ticker symbols, go back to those specific dates here on this that I show in this video, and from those dates, look at the different ticker symbols in the S&P 500 that you're interested in, or you may have overlooked, or you've been a little hesitant, and look at those dates and see if those dates are moving with it as the S&P 500 moves, because those are the dates that the pumps are being pumped into the S&P and the individual stocks, obviously, because the individual stocks make up the S&P, and see which ones are reacting similarly, and pretty much just be very diligent of how you go about it, and pay very close attention to what goes on Monday and how it reacts on Tuesday, because this is the first time out of all these pumps that I see the pump do very little and in terms of rising this back up and just kind of hanging it out sideways. Now, the next pump could probably do an impactful reaction, right, to the charts, but we won't know till it happens. But if we do know the scheduled dates and it starts off next week or this upcoming week, they usually schedule them for a month. So that tactic of starting at one point and watching carefully, and even though it's for a month, just pay close attention to the first time it falls. And if you started here and you ended up here or even right here, let's just hypothetically speak, you held through that fall and it slightly broke through the 50-day moving average and you kind of just fell here. Well, no matter what, buying here and selling at this point, if we go right back to this rise, that's a point from here to here, and that's still gains. The matter of it all is not how much you're going to gain, it's about gaining. Whether it's turning a dollar into a dollar, or turning $2 into $5, or turning $5 into $10, or turning $6 and getting a dollar back, that is turning your money into more money, and that's the goal here. My goal here in all my videos and my whole channel is to maximize profits, minimize losses, but it's not all about hitting big scores, because I know many investors that they do one great score and that's good for them, but if you look at their whole entire experience before hitting that score, or let's say they've hit those scores before, but then you look at all their trades collectively, when they average out, those big scores have just basically brought them back to breaking even, and their profits are probably very, very low. When somebody that doesn't hit a big score, right, but they just focus. And this is what I want to tell all investors that are watching, and everyone, I want to encourage you all to think this way. If you just focus on turning a dollar into another dollar, and every single trade you work your best to become profitable, whether it's a small profit or a large profit, but turning those small profits collectively, you can then look back at your average and your total amount of trades, and you can look at the ones you've lost in and the ones you've gained in. And yes, you may not have hit a home run overall through the period, but if you have, let's say, collectively 30 great trades that are giving you back $100, and your losses, you've lost maybe two trades, $100 each. You're breaking even in a point where you're profitable with 2,800. When you have another person that's done 10 trades, they've lost obviously $100 per trade. Out of those 10, they've lost like five, and then they have another five that they made they made 300 per trade, and it seems all well and this and that, and collectively they've done good and they're very excited, and then boom, when you do the math, they're profiting less than the next person. Yeah, they're making 300 per trade, but it's not giving them exactly the profit margin that they deserve. And a lot of traders don't actually benefit themselves by thinking that hitting those home runs of making more per trade. And when you think about it, I said a guy that did 30 trades at $100, and then I said a guy that did 10 trades and five of them were at $300. Those five at 300 are not really even home runs. Those are actually, yeah, they ideally they're bigger amounts per trade than the guy at 100, but the guy at 100, he's been very patient. He's done it throughout, you know, the month, and very, carefully and being due diligent on his moves, but it's all about turning that $1 into $2. He's not looking for big moves. He's just moving his money from here to there, from in and out of the charts and those markets and that specific ticker symbol, just to profit and go home. That's what you need to go home with, a profit. It's not about, oh, this stock is great. Let me put, 2K in it and I'm gonna get back, two folds it. I'm gonna get back my 2K or 4K and anywhere in between, and then all of a sudden their options or their charts not looking so good because they bought stocks, and all of a sudden the $2,000 are worth $1,000, and then you want to liquidate your $1,000 and you're willing to take the loss because you want to go trade something else that you feel like you're missing out on, and then you come back to that chart and all of a sudden you're like, oh man, I would have broke even or I would have profited if I would have just waited, when instead you could have been focusing on just doing a trade to make $100, a trade to make $200, but make sure that you're profiting those $200 and then go and do it again. But doing one great trade that made you $2,000 and then you do 10 trades that lose you $200 each, that's right there, you just lost all your profits. So um, be very diligent on how you do that, and that's my best advice to everybody. Just focus on making $1 into $2. Don't focus making $1 into $10, because you're then aspiring to hit these highs that you're trying to do an instant gratification, and it could work that way. Don't get me wrong, the market has the capabilities to make that happen, and if you get in the right ticker symbol at the right time, don't get me wrong, don't quote me on that won't happen. No, that can happen, but that shouldn't be what we should all be aiming towards, because that is what makes you end up looking at your losses to profit ratio, and sometimes the losses outweigh the profits. So I want us to all become profitable and continue to make our finances grow, maximize profits, minimize losses, and continue to learn and grow together. I hope you guys found this video helpful and informative. Share this with your friends and community. And thank you guys so much for watching. Anybody that feels inclined or encouraged to subscribe, don't forget to click on the bell. By turning on all notifications, you won't miss a single video that I post. And you'll also see this series as I post it weekly. And thank you again all for watching. And let's make some money.